Manish Jaiswal. He's joining us right now to talk us through what lies ahead for Magma. I mean, we've seen the Q2 numbers. There was a steep surge in NBAs, sequentially. Numbers were a bit disappointing with regards to even the profit numbers coming off a bit. Do you feel that there is a period of uncertainty that lies ahead of you?
I would say the last 12 months post the crisis have been the very trying and tough times for NBFC sector as a whole. And liquidity certainly was not only tight but also expensive. I would say for an organization like ours, liquidity is back. And we are happy to say that we could garner liquidity of almost 3,300 crores in the first half of the year, and almost 60% came in the last quarter. But for organizations like us, which have been in business for 3 decades, the cost of funds has moved up by 117 basis points. And that has shaved off the margin to some extent, but by the time we reprice our fixed loans or the new loans which come on book, probably in the loan life cycle, we'll catch the revenue game. And the stress on economy did affect us mildly, I would say, about 60-70 basis points. But in Q3 and Q4, we are seeing resurgence. We are seeing the mojos coming back, and we are seeing brightness. We would say, for example, our housing sector is growing by 45%. The affordable housing sector, contrary to what we might feel what is happening in the towns, in the hinterland, the consumption story is, I would say, still intact. We are disbursing about 140-150 crores a month, and we see at least the opportunity to serve in that sector fairly sharp, and we are quite sanguine about it.
Okay, but what about AUM growth? I mean, I'm just looking through a report which suggests that expectations of the AUM CAGR growth from FY19 through to FY22, from 12% growth come down to 5% growth. Do you feel that's justified, or do you feel you can do much better than 5% CAGR?
We actually degrew in this quarter, and it largely was because of one large event. As an organization, we became a zero commercial paper company. Not that we will not have commercial papers, certainly we would, but given the current market conditions, it was imperative that we held on to our liquidity, and actually we stalled disbursals very specifically in the month of August. And we believe that this year our thematics will be largely around keeping the AUM flat, getting the asset quality absolutely right, and not getting off the guardrails from the asset quality, and ensuring that we stay profitable, we get our model completely right. These are the times where we would believe that the right thing to do is to ensure that the product mix, the customer segment are chosen very appropriately. I think going wrong in these moments can affect adversely, if not cautious. So I would say that portfolio first with our theme, and we would like to stay pure to that model.
Okay, so you're still looking to be a little conservative on disbursements?
We have recalibrated our disbursals more towards secured and profitable asset classes. Asset classes currently, for example, commercial vehicles are stressed. So we will be lighter on such assets. Assets which are profitable, we'll be redeploying our capital and our energies on those assets. So these are the times where we are prioritizing very sharply on where the profitability in the long run is, and therefore we believe that this particular year holding on a flat AUM is a better strategy.
So even with shifting focus to these profitable asset classes, holding back disbursements with an increase in cost of funds by 117%, is that enough to counteract the kind of the drag that you have from all these other factors?
True. So this particular 4 months to go, I would say, in the year, our strategy has already begun to pay off. It is actually that from the same capital, how more efficient can you get? We have no issue of capital. We are very well capitalized on NBFC. At 28% is a capitalization of NBFC, and almost 34% is the capitalization of HFC. What we would do is that we will focus more on used commercial vehicle assets, used car assets, mortgage assets. We will do SME cautiously because these are the times when unsecured lending can blow up. You have to be cautious. On commercial vehicles, new commercial vehicles, very clearly, seeing the kind of IIP and GDP growth rates and the GST efficiency and also the calibration of tonnage, it certainly is a case for us to ponder, reflect back, and hold on to certain asset classes. So I would feel that asset consolidation and prioritization is going to be our key themes, and we have calibrated ourselves.
Your comment at the beginning of the interaction intrigued me, or rather doesn't come as too much of a surprise though, because Bloomberg News spoke to HDFC Bank and they spoke about signs of revival in the rural areas. You mentioned that as well. However, you mentioned that it was happening in the housing finance pocket. Is it happening in the other pockets as well, aside of housing finance, that rural demand is picking up?
We have to actually segment by pockets and geographies. I would not say that there's a sweeping statement that pan-India you see green shoots of revival. There are stress in some states, and there are states, while the long-term average rainfall might tell us a different story, but when you really go on the ground, you find that there are floods here, and then there are the drought there. So, and I would say it look post a good rainy season, the kharif crops. We believe that the agriculture sector would play up well in the second half. It is trickling, it is coming back. I would say it is not absolutely green. I would say from amber we are turning towards green. And there are still some states where you have to be cautious. But overall, I would believe that the rural sector, the hinterland, is certainly showing certain signs of consumption.
But even agri, is it? Because we hear stress in sugarcane, we hear stress in the state of Punjab, wherein commercial vehicle dealers are saying that, offtake is very, very low, etc., etc. So even non-housing agricultural loans are getting disbursed, or farmer loans, rather.
I would say there are cyclic crops, and there are crops where the reliance of the farmer is not exactly on the income, on agricultural income.
Okay.
So, and there are multiple businesses in the hinterland. The services, for example, and I would say, especially in hinterland, is not so badly impacted.
Okay.
We are, for example, if I look at my collection efficiency in housing, I would feel that we are still at 98% collection efficiency, as overall Magma collection efficiency is around at 97, 98%. What it goes on to prove is that the efforts to collect could be little more, but it is not that that money is not coming in. The GNPA could have moved by 0.5% here or there, but 70 to 80% of customers who are defaulting, they are paying part of their EMIs, which means that the moment cash flow is back, the money will come back to you. So it is not so distressful or alarming that that we would believe that things are hurtling or they have come crashing down.
All right, so what's your ideal GNPA at this point? What are you targeting to achieve? And I just want to actually go back to the point where you say, where you're not focusing much on the SME segment. Why so? I mean, there is a larger market there that you're capable enough to go ahead and tap that market. But why take this conscious decision to step back from SME? Okay,
so I'll address 2 points. The first point you asked was around the projection of GNPA for the organization. As a firm, we are at a GNPA of 6.4% by the end of last quarter. And we believe that the stable range for us is around 5 to 5.5%. And we believe that we will get there. The kind of collections and quality of collections as we witness.
Without growth in AUM.
Without growth in AUM. We believe we will get there. And largely because the second half of the year is structurally and cyclically designed in our country, because the consumption is oriented more towards the second half of the year. So in general, collections are better in the second half of the year, even, as a state of the economy. So that's to answer on your first question. The second part is, in SME, we do 2 kinds of lending, secured lending and unsecured lending. I must qualify my comment that the current market, unsecured lending as an asset class to SMEs has shown certain signs of stress. We are certainly doing it, but we are being cautious, we are being measured, And I think to that extent, I have just said that we will be cautious towards SME lending, not that we are cutting down SME lending. But secured lending, we are completely on. In fact, we are growing pretty well through our assets on loan against property.